Sasol was founded in 1950 to make oil from coal for the South African market, as the country had no significant crude reserves. Today, Sasol uses coal, oil and gas reserves to manufacture and sell liquid fuels, fuel components and chemicals throughout the world. It has a market cap of 250 billion rand, a PE of 9 and a dividend yield of 4.6%. Paul, when you look at Sasol, it's somewhat a cornerstone of most portfolios.
Yeah, it's a hell of a success story. So established, as you read out there, as the South African Torbanite company back in the 50s, substantial government support. And then South Africa goes into an era where it's desperately scrambling for liquid fuels security. And as a result, really some significant pressure gets put on. But that technology, that Fischer-Tropsch technology, which allows them to basically liquefy coal under high pressure, and a synthol reactor, which then converts it back into diesel and petrol and all the other chemical feedstocks, is one of the 7 industrial wonders of the world. That enormous plant at Secunda must be the most profitable chemicals complex there anywhere in the world. And as we know right now, crude oil is kind of running out. But the demand for transport fuels is still at sky-high levels as 50 million new vehicles come on the market every year. So a very attractive investment opportunity, we think.
Pretty diversified when you look at Sasol. Is this the one that you're getting into right now?
It's something we definitely watch. We do have it as one of the stocks, as you say, a core holding for South African portfolio manager. So it's always somewhere there in between. What we like about Sasol is what they're doing at the moment is the gas to liquid. So the coal to liquid, they anchor technology in South Africa, but currently the investment opportunity for Sasol definitely is in the gas to liquid. And that's why they're focusing a lot on North America. They are securing gas supplies and then building plants there to change gas into liquid and then able to transport it and benefit or profit from the arbitrage that's currently in the market for the gas price relative to the oil price. So very exciting opportunity that.
Paul?
Yeah, just to spell that out. So what's happened in recent years is natural gas supplies have significantly increased, partly just because of technology advances and also because of fracking. So particularly in America, which is the world's #1, hydrocarbon market, that's a very exciting opportunity. So as Stefan says, they're looking to build one plant at Lake Charles, which is on the Gulf of Mexico coast, right where Hurricane Katrina went over the coastline. And then the other one will be somewhere up in Alberta or Saskatchewan, because there's also all those shale gases and stuff there. So that's very exciting, and that's why the appointment of David Constable, the new CEO a couple of years ago, who's a Canadian or American or something, was attractive. He said, no, we've got to get out of Iran. We can keep the plant in Qatar because those people are still fine. We've got to de-South Africanize this company. Because when you look at it, it's 250 billion market cap. It's totally over-owned in the South African institutional market. It needs to break into the global energy investment community. And to do that, it's got to have assets in places other than places that start with a Q, like, Qatar and Uzbekistan and South Africa and stuff. Because I think really ultimately this company will either go big on the global stage or it'll get acquired by the likes of Chevron or ExxonMobil or something once it's internationalized its technology.
Indeed, it's about the growth potential for Sasol. Do you see that whole gas to liquid type of operation being the kicker for this?
Yeah, very much so, because the gas is what's available. Coal is too dirty. You can't use it. Its greenhouse gases are a problem. But the process is the same. In fact, at Secunda, they use a lot of natural gas from the Mozambican fields, which they pipe in via Komatipoort, because the first stage of the coal process is where you gasify the coal. So you can just take the natural gas and start with that. That's fine.
So, Paul, looking at the share price, it's still hovering around 400. It's not going anywhere. I mean, if you look from 2009 to 2012.
It got to 500 back in 2008, because you'll remember the oil price was $150 a barrel. The world was going to be, just going big. And it fell basically by half because of the global crisis and the collapse of the oil price and all the rest of it. So it's kind of crawled its way back from there, and it's now at around 400. And, people say it doesn't really deliver and so on, but arguably that 500 price was a bit of a flash in the pan.
So hot or not for you, Stefan?
over the long term, if you have faith in the management and you believe that these projects that they're currently starting up in America is going to yield dividends and are going to be profitable, the gas stays at the current levels, then Sasol is a screaming buy. The problem is that these new projects are only really going to come online in about 5 years' time. So up until then, this is basically going to follow the Rand oil price. So it depends on what over the medium term, what's your view on the Rand oil price. If you're positive on that, it's hot. If you're not. But
So for
I
you-
believe in the long-term story of Sasol. I think it's hot.
Right, Paul, hot or not?
No, I'm very hot on it because I like its scale and I like that story. I agree it's going to be a while, but the trouble is you have to kind of buy in order to be part of that future. You can't wait until it's developed because then it'll already be in the price.
So buy in now.
I think so.